Boom, we are live, ladies and gentlemen. Thank you for joining us today. This is Tio with the Arcane Bear. Damn, it feels good to be right in these markets. Now, for those of you that have been following us for quite some time, you know that Ethereum just exploded and we've been waiting for it patiently. And we just entered phase E. One of the great things about studying is that you can build your own confidence in the market so you can pretty much ignore everybody else. Now, in my spare time, I've checked out a few of the other YouTubers, and no shame to them, but I don't think they have a clue what's going on in the markets. Now, I'm not saying I do either. What I have a very clear understanding that I think the markets know what's going on in the markets, and that's what we're trying to do, is some way, shape, or form listen to those markets and what they have to offer. So what we're going to do right now is we're going to dive in, and we are going to be taking a look at our favorite assets in the crypto space, starting with Bitcoin and then moving on to Ethereum. So right off the get-go, if you can see our chart now, which I believe you should be able to, yeah, that's a true story. You can see Bitcoin here open on the 4-hour. We've been watching this and have not changed a single thing within our drawing here for almost 30 days. It's kind of one of the nice features, again, about building this. Yeah, 31 days it's taken us to get to this point. It's one of the nice features about getting to this type of sentiment analysis. It allows you to be patient and confident. So as you can see right now, we are starting to break above the middle of this trading range. Now, a few weeks ago, before we had this first big top out, we were looking for a secondary test. We got that. Now I think we're going to have a run against resistance, which is approximately 40 to 42,000. If we're really lucky, and I say lucky here because I'm hoping we get another opportunity before we get a massive blowout, is to follow this reaccumulation pattern that we've been watching for quite some time. So this is a pretty standard reaccumulation pattern. I don't know why this is not loading here. You always wonder, like, oh, why is the internet not working properly? Boom, there we go. It's a fairly standard reaccumulation pattern. And we've been looking at these for quite some time. Now, this second move here up against resistance is kind of what we're looking for. So here we can see we're in phase B. To some degree or another, you could make conjecture around the differentiation around what phase B and phase C look like as a transition. Again, we've seen multiple times where phase B will run up into resistance and the spring will actually never come back below the point of control here, just like we saw with Ethereum. So if we see with Ethereum here, phase B, after the spring effectively was here, and phase C, as we had gone over this multiple times too, this spring. Now, one of the interesting parts here is this is why pattern traders almost always get wrecked in the markets. As you can see, we have what would normally be a rising wedge, which is a pretty bearish indicator. But if you know where you are in the bull market, you can ignore these things, and they actually become bullish indicators. And as you can see, pretty much as soon as we got to the top here for Ethereum, we did start to hit a little bit of resistance, and then we exploded above that. So we're looking to see further confirmations, probably closing above this before we get some real quick moves to around 2,600. But back to Bitcoin here, I'd like to make some more conjecture. I think one of the most important things we can do here is learn together. So the other day when we had this quick run up to, 32,000, 38,000 from the Bitcoin Musk tweet, we very quickly retraced that. This type of momentum in the market was very quickly wanting to be sold down, as a lot of bigger players knew that they could quickly dump their price into the market and start to reaccumulate back at these lower ranges. Now, in our private group yesterday, in our private Bear Forge, we looked at something very briefly before the price blew up. And this is where I think pattern trades are important. Here you can see an inverse head and shoulders, and this was a nice reaccumulation range. And this could be defined as our spring here, although you don't really want to label it as phase C. Pattern trading inside of the range is really the only way I want to look at pattern trades, and more effectively to remember where you are in the market as a whole. So if you've been joining us for long enough, you would recognize that the market as a whole has actually been in a bullish movement since March 11th, the day that the WHO declared a pandemic. The reason that is the case is because it's a psychological indicator of, as what Warren Buffett would call, buy when there's blood in the streets. And you literally want to follow that sentiment, not metaphorically, but quite literally. When there were people dying in the streets, potentially, that was the best time to be accumulating these undervalued assets after the market had reacted to that information. So here, on this much more short-term basis, this inverse head and shoulders, we went over this in our private Bear Forge yesterday, and as you can see, since that time has elapsed and we closed above the POC, we've had a 10% run on Bitcoin. And again, these smaller trading ranges that we've gone over before, I think are important to indicate because number one, back here, we drew out what was a rounded top and it was a temporary distribution like this. But that distribution was just a shakeout in what later became obviously a much larger accumulation range. So when we're studying from now on, we've come up with a new term that we would like to use, which is a micro distribution, or an MD for short. This means it is often co-aligned or aligned with the buying climax, because I think one of the big problems is if people hear the word bullet or bearish, or more importantly, distribution, especially as we're studying these types of things, it's really easy to assume that we're going to go lower and people get pushed out of their positions and they become emotional. And that's exactly what we're trying to stop from happening, is you guys getting pushed out of your positions in these early days. Now, the second thing I wanted to talk about is leverage trading. Now, for those of you who are new, do not leverage trade at all, because you're just going to lose money. The best thing for you to be doing right now is accumulating spot. If you're listening to other YouTubers and like, yeah, if it goes up 10%, you'll make 100%. Don't just ignore them, okay? Because you have no skill set to be able to actually make that trade effectively. And you'll probably end up just chasing your tail when in a bull market, it's fucking amazing. You can literally just put money in almost every day until the bull market's over. And then you will be in the positive or in the green or in the black, depending on how you want to measure that sentiment. So I try to ignore a lot of other people. As a matter of fact, the reason why I read so many books is so that I can ignore all the other people who are spouting off nonsense in the markets, because they often don't know what they're talking about. And more importantly, they haven't always been here that long. So it's a big deal to some degree or another to be able to be really confident about your own conclusions so that you can make your own decisions. That can never be understated. The confidence to build your own conclusions. Really what you want to be doing is not making any choices based off anyone says, even my own conjecture. I'm confident as fuck right now, but I've been here for a while. I've been doing this for almost 10 years, trying to understand what the hell these charts mean and how they work. And it's taken a long time to get to this point where I can be like, yeah, fuck yeah. Don't just take my confidence for it. Although I can make doing like a backflip look easy, if you're new to this, you might fall flat on your face, and even worse, you might really hurt yourself. So don't leverage trade. If you're new to this ecosystem, just focus on spot buying and doing your homework, your research, and your study. Try to ignore everyone else. They're generally making money off your failures and the few successes you might get from leverage trading. If you're really good, if you want to learn how to do it by playing around, go lose some money in there. Practice preservation of capital with leverage trading. But more importantly, understand that in a bull market, you could literally just put money on almost on the daily basis, and you would do fine. Okay, and it kind of upsets me that some of these guys get so many views because they pander to the emotional aspect of the new trader and the new investor. Well, little do they, as the average person, realize they're making money off of you. Right? So we have a private group where you can join. It's significantly cheaper than the amount of money you would lose in your first few leverage trades, most likely. So I highly suggest it. Go to arcanebear.com/private in the links down below and join our private group, because doing that will probably save you a hell of a lot more money than you're going to lose over the next few years. Okay, not financial advice, but you do whatever you want, but I highly suggest it. We have over 500 members who absolutely love the work that we do. Okay. Next thing, Ethereum and Bitcoin we've been using as our market leaders, and for good reason. I want to thank Charles Hoskinson for coming on the show yesterday. I had a great time chatting with him. We've added Cardano to our more permanent watch list, and some of the things that look really interesting to me as we go into Ethereum, you will see probably quite clearly. Now I'm going to remove this rising wedge pattern. I'm just going to leave the bottom ascending channel for now. And I also want to take a look at Link, because we can see there's a lot of similarities forming here, and you can see something similar between Cardano as well. Now what's interesting here is you had the same pattern form on Cardano, Link, and Ethereum, but Link has not blown up out of that position yet. So it would be a pretty interesting conjecture to say that if we get one more touch here on this reverse, God dang it. Oh yes, on this, we're going to get a massive explosion out of Link here as well. I suspect that when you start to see these consistent patterns evolve on the reaccumulation, and then you see the explosiveness outside of that pattern, it's good to keep an eye on them. So importantly, Link is on our table for that one, and so is Cardano. Now again, the kind of important part of this question and conversation is, look guys, DVD was not the best technology. Blu-ray was better than it, but look, DVD won. And then very shortly after, both DVD and Blu-ray, nobody's ever heard of them. Depending on how old you are, you might not even know what the DVD is. Like you would oh, I think I've seen that on the internet once before, like a digital image of a DVD, but you've never used one. Or tape, or a cassette, right? Technology changes so quickly that a lot of the times what's important to understand about venture capital is if you would put your whole investment into DVDs, and you're like, yeah, DVDs are the future of like data distribution and storage. Like, look how easy it is. But little did you realize that the internet would eventually catch up to the speed it would take to just transfer that DVD over the internet in mere seconds. Well, then you would have missed the whole like elliptical curve and change of technology. And that's super important to understand because things progress so quickly here that you might miss the boat. And this is why I say venture capital is extremely important to understand that you're going to fail a lot of the time in the venture capital space, but those few that work make up enormous amounts of success. And again, I highly suggest going to check out the conversation I did with David Hornick, who made $3.6 billion off venture capital. He was one of our podcast guests back in August. He was one of the managing partners at August Capital, and he was one of the Forbes Midas Touch players who got like 7 out of 10 of everything he invested in right, which is ridiculously high numbers. Anyways, Ethereum is another one of these great bets, and although the technology is not the best per se, the community is starting to adopt it. And we've seen most of the DeFi platforms for now have been built on Ethereum. But there's nothing to stop them to really move to Cardano, to Polkadot, Avalanche, and these other ecosystems as time evolves. And more importantly, I think we're interested in the interoperability of each of these as things move forward. So this big explosion we were expecting, and luckily we got it. Well, not luckily, but yay, lo and behold, the markets were right. Not me, the markets were right. All I'm trying to do is follow the sentiment of the market, and as soon as we hit the top of this pattern, we started to blow up. Now, a big part of the question here that I'm going to be excited about is looking for a reaccumulation pattern that forms outside of this box. Somewhere around a 10% range would be nice to see, or 6%, or you get a drop like this. I was kind of hoping it was going to happen here, just below the box before it exploded, but nah, we got a really, really small, only multi-percent accumulation down here before it broke above the box. So again, these patterns represent something more useful to me. I took a leverage trade here. I was in profit here. I got stopped out here. I had to do a bunch of stuff this week. I didn't get back in that leverage trade, but I did buy more Ethereum here because it was a spot price. And I don't really have to think about spot price, as you shouldn't have to think about it either, because we're early on in this bull market. As a matter of fact, I think we probably about 120 to 180 days pretty easily left moving forward. So moving forward, the bull market is going to get face melty. It's going to move so quickly at one point that you won't even know what to do. And that's where we start to be interested in taking profits. It could be Bitcoin as high as $280,000 and Ethereum upwards of 10 grand for all I know. Right? And we'll be really starting to push the threshold and the limits of the supply at that point. And we'll be keeping close track and close eye on Glassnode. One of the interesting characteristics about our study here is the ability now to watch something that we didn't used to have data for in 2017, which is how much supply is coming onto the open market. And currently, on a day-to-day basis, none. There's no supply coming onto the open market, and as a matter of fact, it's leaving every day. If we go to our favorites here, we can look at the exchange balance percent, and it's dropped from January 30th to February 1st, just the previous day prior. We've dropped almost an entire percent of Bitcoin's total liquid supply onto the market, leaving the market. This again increases the volatility to the upside during a bull market and increases the speed at which we get to that top. So back to our original conjecture here. Link, the next on our list, looks very, very well primed to move forward. We can see what amounts to a spring effectively here. These nice volume supply indicators, very, very nice as well. Very similar to Ethereum and ADA. And this move outside of the box for both ADA and and Ethereum represent what I think is going to come next for Link as well. So one of the fun parts here is your ability to build confidence in the markets is really going to increase your chances of success over the long term, because you know where you are. And instead of listening to every YouTuber get super emotional about the prices going up and down, a pump and a dump and a pamp and a plamp and a poomp and a doomp, you can just turn them all off. You can go about your daily life. You can do some really simple charting, and you can become effective. Now, I saw some of you guys like, oh, something like Mr. Kirby's shit is different. And say, well, they're not as good as analysts. I've watched their stuff. And it's not that I'm a better analyst. The difference is one is listening to the market and the other is trying to come up with a bias that suits their opinion. I don't give a shit. I really don't care what the market does. That's like a huge benefit of being here for so long. Ultimately, I have a ginger tonic company here that's probably going to break 6 figures over the next 6 months. I've got businesses I've been building, and with the Arcane Bear has a beautiful future from what I can see. The ability to focus on venture capital and marketing investment. Like you compare Stansberry and Research, Palm Beach Confidential, Agora, or Weiss, I'm sorry, I'm just adding things I don't yet know. I don't know what Agora is, so I'm adding that. But the Weiss reports, these guys charge a ridiculous amount of money, and their market analysis is nowhere near as good as ours. So again, I'm not trying to toot my own horn here, but what I feel very confident about right now is my ability to listen to the market with an unbiased opinion, because I don't really give a shit what it does anymore. I've supplanted myself in a great position where I can go surfing and I can do the simple things I love doing, which is sitting in my jacuzzi, reading my books, taking my dogs for walks, and playing music. I'm not out to buy Ferraris and dress myself in ridiculous, expensive clothing for no reason, right? So to meet the needs of my understanding of the market bias doesn't exist anymore. I surpassed that long before I started investing. So part of the interesting aspect of building business is to know that you have the security. Like, you could take all my money away from me, all my things away from me, and through my network and what I've built through kindness and competence, I could get myself back to six-figure income probably within a year. It'd be a great document to try to do 1 year when I've got more free time, but it's not the time right now. We could probably just like, okay, how? Because I did it once. I went from absolutely nothing. I went from a street kid who was playing music for food in restaurants when I was 18 years old to where I am now. And that's a big difference. Once you know that that path is open to you, there's nothing stopping you from doing it again. So clearly, I think that's an important part to understand, is that once you don't really care what the markets are going to do to your portfolio, it becomes a hell of a lot easier to listen to them and make money during that process, because it's not the money that drives you. It's the interest in actually learning and understanding what's going on, not a prejudice to like, oh, I hope that the market is going to go up. I don't really care. If it's going to go down, I'll change my bias then. But for now, we are bullish, and we're going to remain that way. And I'll argue vehemently against anyone who says otherwise, because I've been here for a while. Now, again, the importance here is to understand that building your own confidence and your own understanding of the markets is what Arcane Bear is trying to help you to do. So I hope that through these videos and through the content that we share, you guys are able to do that. Again, go check out our private group. No risk. If you want, like if you join, you're not happy, which you've only had a few people out of the hundreds that are in there, ask for a refund. We'll just give it to you. Like, great, you can take the $45 back. Like, not a big deal to us, right? So why not give it a shot? The chances are just that the yearly membership is going to save you a lot more than from losses that you would likely make from just doing silly. Anyways, it doesn't matter. You make up your own decision. Okay, next thing. Back to Link here. It does look like we are becoming quite bullish in the final stages of this backup. We produced this trading range, I think we kind of made some mistakes with that trading range back in August when we thought it was a rising gradient bottom. I miscalculated some of this aspect. So if we want to look back and take a look at my mistake here, we were calculating this rising channel, but missed that this was the selling climax. So we hadn't actually hit the automatic rally yet. And that was a little bit of a confusion for me. So we fixed that back here in November. We're like, oh, okay, this is where the trading range actually started. We hit our first primary buying climax, and our sign of strength here is our spring. And then it became a lot clearer. Now, again, I'm not perfect, right? All I'm trying to do is figure out where each one of these individual assets is during the market price and its accumulation ranges. So Link is in the final stages before it basically blows the fuck up, and that's really exciting to see. Next, Aave. Aave was in a rising gradient bottom, and as soon as we hit this, we had our first reaccumulation pattern of spring, a second reaccumulation pattern. And again, the interesting part here, guys, is generally pattern traders are almost always wrong because they don't know what side of the market they're in. And until you know where you are in the market, it's really hard to make conjecture here, because you could be like, oh, see, it's a rising wedge and it's bearish. See, it broke down, but it didn't. This is just a backup phase. This is a glorified backup phase, effectively. And boom, just before you know it, we're up another, what is that? Another 25, almost another 25% on Aave from that phase. So what we want to do is remove a lot of our pattern trading tendencies to listen to the people that are using pattern trading. Just focus on trading ranges and ignore pretty much all the other study out there. I know you're like, oh, I want to learn as much about the market. Why? You can simplify so much by understanding trading ranges and volume and focusing on the architecture of the trading range primarily, then followed by the volume. So here, Link is giving us a pretty nice signal here. You can see throughout this range, we've been declining in volume and in volatility. So there's a pretty obvious decline aside from the spring of volume, and the volatility has been tightening. This is an extremely important part for the last phases C through D and E, which is what I believe we're about to enter now. Now over to KNC. So our private group, we sent out an update. Mr. Baloo and the Bear Forge and we try to go over once a week. We do a private webinar with everyone. We sent out KNC updates, I believe, at 1.12, where the POC line is here. We usually try to get them out at the POC line, and we are up approximately 20% on that trade. So, or that educational trade so far. Again, none of this is investment advice. We're strictly trying to bring particular cases where you can use them to study. To a big advantage. And now that we've closed and consistently closed above the POC here, we're probably going to run to around $2 quite quickly. One of the other ones that we've brought to the table recently in the private group I want to go over for everyone was Band. Our Band newsletter went up when we were at the POC line at around $5.20. So if I have to remove back here. So for those of you in the private group, you will have got these emails. The Band update went out here at around 5.8, 5.2. I would have to double check. I think it was 5.2. We saw the first big sign of strength, the shakeout, our automatic rally, our spring, and we've seen our secondary test, and a breakout. So early conservative charts that Baloo has put together on the P&F figures for Band has us as high as like $37, which is just ridiculous. Again, these are venture capital plays. I'm not using leverage in these in any way, shape, or form, but I am accumulating during these spaces. I tried to leverage trade here at 7.7 and just got wicked out on this last wick here, but that's a different story. So now I just use spot and I look at this solely as venture capital. I think it's extremely important. And understanding how venture capital works is extremely important. Again, I highly suggest going back and watching the podcast that we did with David Hornick. So right now, guys, if you want, first off, go to www.arcanebear.com/private in the links below, and you can join our private group. Let's see here. I don't know why the internet's going slow. Yeah, there it is. There's our private group sign-up page. Go through, you have fun. You got a bunch of great reviews from a lot of our members here, which is really nice to see. And also, go to the YouTube page and make sure, if you haven't yet, hit subscribe. Hit that little bell button. That way, every time we go live, because we will be going live every day for the rest of this year. So hit the notification bell and you guys will get notified about that. The last two, if you want to take a look at more of our socials, you can follow us on Instagram as well. This is another great way to go. I like to post photos of rounded bottoms with rising wedges. It's the perfect kind of pattern trade right there. Nice rounded double bottom with a rising wedge. Anyways, besides the point. And finally, lastly, on Twitter. Yes, go to Twitter. Follow us on Twitter as well. All the social media places are a fun place to be. Now, one of the things I did want to go over is when you get to the search bar, if you type in David Hornick, Hornik, and the Arcane Bear, you will see this wonderful podcast. Only 435 views. Man, people are missing out on this one. David Hornick did like $3.6 billion in venture capital, and you will absolutely love this. This was done 7 months ago in the middle of the pandemic. He has worked with some of the world's biggest technology companies, and although he was not an early stage fan of Bitcoin, I'm sure we'll sway him again. I may even look to having him back on the show just to help emphasize some more of his story and the importance of how venture capital works, because you often get a lot wrong, but those few that you get right make up in orders of magnitude. Okay, so back to the charts here. Lastly, what did I want to finalize off with? We went over Band, we went over KNC. Right, the automated market makers, things like Uniswap, Octify, and Sushi. Now, currently, Sushi is going to be a great educational aspect. So we've been watching Sushi back since 2020. I bought more of it. Sadly, I should have bought a hell of a lot more of it, apparently. But I accumulated some of it because I do like these automated market makers, and I think there's a lot of room. Uniswap is just not keeping up with the pace. And Sushi Swap is a lot better in terms of its governance, as well as its rewarding of the holders and the how they got rid of some of the venture capital play. One of the things I wanted to highlight here is this Jesse Livermore's rising, widening megaphone pattern. Now, if we go back to the internet here and we just type shit in, because that's one of the best ways, Jesse Livermore pattern. Please read Reminiscence of a Stock Operator 2. You will absolutely love that. This was his rising, widening, megaphone pattern. And we have seen this now for Ethereum and a few others. There it is. Let's see. Bam. The rising, widening megaphone pattern. And although that does not always get number 7, because Ethereum broke up at the top of number 6 here, this is where the bull market truly starts. And as you can see right now, we are starting to get into some of the early stages of the bull market for things like Sushi. And again, if we go back just as a retrospective analysis, Let's go, we'll just overwrite KNC for a moment. We'll double back down. We've been watching this since around $380 Ethereum. For those of you who've been here long enough, you'd recognize this. I think it was on the BUSD chart. Just let it load there. Bam, there it is. There's the rising, widening megaphone pattern that you get before you get these really explosive moves. So even though we mostly focus on horizontal trading ranges, once you get out of the horizontal trading range, which would have effectively been the end of here, that would have been the spring, the SOS and the backup, and you started to have this stair-step pattern out, bam, you just get massive explosions outside of these widening megaphone patterns. So it's kind of one of the important ones to add to the list. Here you can see, same thing with Ethereum. We had our spring in March, we had our first characterization, right around 380, 420, I was like, guys, we're super fucking hyper bullish right here. Look at this widening megaphone pattern. I thought we would actually come down for number 7, but you could calculate that what I was actually doing was making a numerical error, and you could say that this was 1, 2, 3, 4, 5, 6, 7 effectively before the breakout. So 1, 2, 3, 4, 5, 6, 7, boom. And then that would give us this fairly confident 1, 2, 3, 4, 5, 6, 7, boom. So again, there's multiple ways to study some of these, but if you look at how we were charting Ethereum, this was the end of the trading range. This was the primary SOS. Again, if you have been with us since March, you will know, and you will hopefully already have these charted. This is what that chart looked like. Here is the primary SOS. Again, I have not changed these in one way, shape, or form since basically June. So we're following on the exact same thing we've been charting since June. One of the fun things, someone calls it the bullhorn. Yes, accumulation with widening mouth. I like the bullhorn. That's a great way to do it too. I suspect that we're going to run to around $2,600 for Ethereum here pretty quickly. If we get a backup phase right at this regression line, that would be super sexy. I really hope we do, just so I can get into a leveraged position again. But that's it. That's it for today's episode. I hope you guys enjoyed that. I hope all of you guys are getting a lot of value out of the live streams. I know you guys are getting a lot of value out of the private members group. I've been able to talk to a bunch of you, and I'm great to hear all the positive feedback that you guys are absolutely loving it. So give us a thumbs up if you like this content. Yes, we're just going to leave it at that. Take a quick look at a few of your guys' thoughts and questions today. Let's see here. On the screen, you can see my face. And I was trying to do this like subscriber goal thing, and I'm not sure if it's really working. We're trying to figure it out. Again, I don't really know. I'm trying out a new streamer thing here, and I think that every time one of you guys like gives us a thumbs up or something, yeah, deep effing value, nice, so much, thank you, bro, I appreciate that. Yeah, there we go. So you think sushi will outpace uni? I don't think it's really about outpacing again, guys. You don't really know who's going to win. So the best way to play venture capital is to put a little bit in each of them. And that way, when 1 or 2 fail, or 3 or 4 fail, and you had 5 or 6 of them, and you get those last 2 right, those last 2 pay astronomically higher than the 1 or 2 fails you got in the meantime. Martin S. Says, can you take a look at Icon, ICX? Well, Martin, because you gave us a super chat, we will do that. And I will go over to Icon. Now, again, guys, you might not like what I say once we start looking at Icon, because that's just the way it goes, but I'm going to tell you what I think. Okay. So, Icon. Let's go out to the daily here to start. Okay, so we're going to start right from the simplicity aspect of here's our spring. Effectively. And it's only 500%. Now, I say that kind of cockishly in a bull market. Oh, it's only 500%. But really, when you compare it to Cardano, which was at 1,800%, Ethereum, which is now at 1,800%, Band, which is at 8,500%, this is not really worth it. The momentum is not here. Now, one of the interesting conjectures we could make is, are we seeing a widening megaphone structure? And I don't think that's the case. Right, it's just not there. We're actually seeing more of a rising channel, and this is considering we're in a full-fledged bull market already, there's just weakness here, and you'd want to see a lot more strength at this point. Like again, if you compare it to Band USDT, and you measure Band from March, okay, had you bought Band in March, you'd be up 5,300% today. And around if you got out right at the peak, 7,600%. So let me tell you that in layman's terms. If you put $1,000 in Band in March, it'd be worth somewhere between $50,000 to $70,000 today. We're just only $1,000 in there. And that's a true venture capital play. Is when you can put a small amount of money in at the right time and you walk away not knowing which one's going to be the leader, and you come back and it's worth 50 to 60 times more. And meanwhile, the other ones you bought failed. Now, some of you ask, like, well, what happened to Pillar? Well, these are venture capital investments. You should never put too much money in them because there's a high likelihood that most of these will fail. But it's about playing a numbers game. Any good investor will tell you this. Again, I highly suggest watching that podcast with David Hornick, someone who's done $3.5 billion in venture capital, right? Don't take my word for it. I'm just some kid in the jungle, right? Like, David's done way better than I have. He's also 20 something years older than I am. So we could make some conjecture about time, but this is a different story. So nonetheless, I really appreciate your guys' support. We're still big fans of Avalanche and the rest of the tokens we've gone over. If you guys really want to sway my interest, you can always drop super chats because that goes straight into our Kiva campaigns. But until then, it's super sexy out here in Costa Rica, and my time at the beach is worth a lot to me. And because there's only 243 of you on stream right now, like, oh God, I was hoping to hit higher numbers, guys. Tell your friends about the Arcane Bear, and maybe we'll spend some more time on screen next time. I'm just kidding. I love you guys for all your support. Thank you. This has always been one hell of a ride. I love that we get to do this stuff together. Yes, you guys are amazing. Cheers. Give us the likes, give us the comments, give us the dislikes, whatever you guys want. I appreciate you. We will see you guys in the next episode. What is this? Intro.